welcome you for the 2 days brainstorming session on NBFC. And what a better way to start the session with none other than General Manager in RBI who looks after the intricacies of NBFC, Sri Abhijit Majumdar sir. Sir, thanks a lot for accepting our invitation on behalf of ACA Study Circle. With
Thank
this,
you.
let's
Thank you.
start the session. But before we start, we recognize the presence of our regional council member, CA Mayur Agarwal, who also happens to be our own member of the study circle. So, friends, requesting you all
Thank you so much.
to please, as a customary, we start with our institute motto.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. Thank you, everyone. Friends, whenever we talk about non-banking financial corporation, NBFC, non-banking financial companies, there are lots of queries which come to our mind. It is because of a very dynamic sector, NBFC, and with the days to come, as India is a very dynamic country, many ifs and buts and many ways are there whereby the loopholes were being enjoyed by many corporates, and therefore there has been more stricter rules and regulations which are in place, and the compliance with the Nbfc is going to become more tougher day by day, so that people fall in line and comply with the requirement of the law. And to discuss the same, we have none other than Sri Abhijit Majumdar ji, who looks after East India and all the NBFC company in East India. So without further ado, I request CA Mohit Bhuturia, the member of ACA Study Circle, to take the proceeding forward. Mohit ji.
Thank you. Thank you so much, convener Mr. Vivek Agarwal. Our guest of honor for today, Shri Abhijit Majumdar sir, our own committee member and council member, EIRC, Mr. Mayur Agarwal, my other colleagues and friends in the profession. Thank you so much, Vivek, for giving this opportunity. Friends, we have conceptualized this 2 days session on NBFCs. The first part, Abhijit sir will be discussing about the recent developments in NBFCs and the expectation of the regulator from the auditors. Then we'll have another round of deliberation on NBFCs. Tomorrow we have a session on taxation, specifically with respect to the NBFC aspect, as well as the implications for NBFCs on GST. Tomorrow it will be Mr. Pradeep Kapasi who will be speaking on direct tax, and Mr. Puneet Agarwal will be speaking on indirect tax GST. Now, coming to our topic for the day, friends, in the last 2 years, if we say post-COVID, much regulatory changes has been made by the Reserve Bank concerning the NBFC sector, which affects the NBFCs as well as the auditors. So a series of circulars around 20 to 25 have been issued by RBI in last 2 years, specifically concerning NBFCs. Now, one circular which had attention of all of us and has been regularly being discussed and debated by us is the guidelines for appointment of central statutory auditors. The circular dated 27th April 2021, followed by an FAQ on this circular. So then we have a circular relating to declaration of dividend. This was issued in January 2021 by the Reserve Bank of India. We had a scale-based regulation. The RBI is shifting from the existing regulation to a scale-based regulation, and this will be implemented with effect from 1st April 2022. There has been guidelines on prudential norms on income recognition, asset classification, and provisioning as to when an NPA, when an account which is classified, when an account should be classified as an NPA, and when the upgradation of this account from NPA to standard should be done. There was a circular dated 12th November 2021, followed by another circular 15 February 22 by the Reserve Bank of India. Again, a circular on PCA framework for NBFCs was issued, a circular on registration of assignment of receivable, registration of factors, transfer of loans. These were issued by RBI, and many of the circulars have been withdrawn. The circulars which have become obsolete have been withdrawn. The master directions which RBI issues from updates RBI from time to time has been last updated just 2 days ago as of 5th March 22. So one, as an auditor, one should look at these master directions which have been updated, and this master directions captures most of the circulars which has been issued by the Reserve Bank in the last prior to the last updation. So we have a circular for both systemically important companies and non-systemically important companies. Now, before I hand over the proceedings to Mayur, one point which would I like to state here and would request our speaker for the day, Abhijit sir, to deliberate upon is on the guidelines for appointment of central statutory auditors for NBFCs. In the circular dated 27th April 21, it was stated that in respect of companies with asset size over 1,000 crore, non-deposit taking companies, they would be subject to this prescriptions of this circular, but companies with asset size less than 1,000 crores will be able to follow their extent norms. The understanding therefore thus goes that this circular dated 27th April 21 does not apply to those companies which have asset size of less than 1,000 crores and which are not deposit taking companies. Thereafter, a FAQ was issued as to the number of assignments which an auditor can take, which was also there in the 27th April circular, in which it was stated that there is a cap on the number of audit assignments for NBFCs to 8. Therefore, it was understood that since this circular applies to companies with asset size more than 1,000 crores, only auditors of those companies doing audit of NBFCs with asset size more than 1,000 crores would be subject to this cap. And besides the cap, there was also a prescription about what should be the minimum qualification for an auditor for appointment of an NBFCs. So as we all know, the RBI by virtue of this circular has stated that existing NBFCs who have served already 3 years till 31st March 21 are ineligible to continue as auditors, and the company will have to appoint new auditors again following the guidelines. And only after a term of 3 years, then the auditor has to, instead of a 5-year term as prescribed under the Companies Act, under this new guidelines for companies having asset size more than 1,000 crores, there will be a term of only 3 years, including the existing term already served, and thereafter an auditor would be subject to a cooling period of 6 years, and only thereafter that audit firm can again be eligible, again subject to the eligibility conditions mentioned in the circular. But it was fairly understood that as far as companies with asset size less than 1,000 crores are concerned, these provisions do not apply. So, but after the FAQ has come, where it has been stated that there is a cap of 8 on the number of audit assignments to be done by any firm, irrespective of the number of partners. Therefore, there is a much a debate and confusion in our minds as to whether the limit of 8 applies to even audit firms who are doing audit of companies only less than 1,000 crores and not doing a single audit of entities above 1,000 crores. So therefore, whether the cap even applies to them also. So there is a big confusion there. Moreover, there is one point on this multiple NBFCs. So it has been fairly understood that if an entity falls part of the promoter group and the aggregate asset size of all the companies in the group taken together exceeds 500 crores, all the companies will be subject to the SI directions, and they have to comply with the enhanced supervisory directions for each of the companies, meaning thereby that the formation of audit committees, appointment of independent directors, formation of nomination committee, enhanced prudential supervision requirements all apply to these companies. So I would request, sir, in the course of this deliberation, if you can clarify on these few issues which have been, most of these issues are raised by the members. If you can clarify on these two issues. With this, I would now hand over the proceedings to our committee member, Mr. Mayur Agarwal, to please do the introduction of sir and take the matter forward.
Thank you. Before Mayur starts, we recognize the presence of directors from CP, Director Chanda Shukla ji, who is on behalf of CP attending this program on the very important topic of NBFC. Welcome Chanda Shukla ji at ACACS Tension.
Thank you, Mohit ji. It's my privilege to introduce the speaker and chief guest for this workshop, Sri Abhijit Majumdar ji. Sri Abhijit Majumdar, sir, is General Manager, Department of Supervision, Reserve Bank of India, Kolkata. He has worked in various departments and center of RBI for the last 27 years. Prior to joining RBI, he had worked as an officer with Vijaya Bank for around 2 years. Sri Majumdar is MSc in Physics from CAIIB. We welcome you once again, sir, to ACAE, and I'd request you to start with your deliberation.
Thank you very much. And it is my privilege to be with the Association of Corporate Advisors and Executives. This is your every year you are holding it, but due to COVID, I think there was a gap. But now the situation is gradually improving. I hope this kind of seminar, whatever you are arranging for inculcating the information, latest information about audit space, that will continue. And I wish ACAE all the success in your life and in the so is it am I audible properly?
Yes, sir.
Yes, sir.
Okay. So I'll share my screen.
Yes, sir, it's visible.
It is visible. So my topic is on recent developments on NBFC sector with special emphasis on the guidelines on appointment of auditors. Mohit ji has already chalked out the latest framework of RBI guidelines. All of you may be aware that NBFC is playing an important role in credit delivery mechanism, and it is growing. As we'll come to the slides, then we'll see that NBFC, how the NBFC sector has been continuously growing in terms of or in comparison with the banking sector also. So this is the first slide, the role of NBFC. Is it visible or?
Sir, visible, sir.
Sir.
Okay. The NBFC is meeting the credit needs of niche sectors and geographies. And if you talk about geography, then I would say that in Eastern region, 50% of the total NBFC in India are concentrated. But that is number wise. If you consider the asset size wise, it is only 5% of the total asset size of all the NBFC in India. So you can understand that most of these NBFCs, which are concentrated in eastern region, especially in Kolkata region, are very small. They are just meeting their regulatory prescribed criteria, like net own fund of 2 crore. And how much business these NBFCs are doing, that is also a question mark. But some of the NBFCs, especially I'll talk about the microfinance institutions which are functioning in this area, like Arohan, they're Arohan or Village, they are doing quite a good business. Uniqueness of this NBFC, they are providing personalized services, quick decision making, low transaction cost, and prompt services. This allows this NBFC to be accepted by the customers in comparison to the banking sector, you can say. So that's why, and they are also providing services to the underbanked and unserved sector section of this economy. So if you compare this NBFC with the banking sector, so the next slide talks about what are the difference between banks and NBFC. There are 5 types of banks are there: commercial bank, small finance bank, payment bank, cooperative banks, and RRB. Whereas in NBFC, there are 11 types of NBFCs are there, including housing finance company. And we are regulating those NBFCs, or we are segregating this NBFC or categorizing this NBFC based on types of activities they are doing. Regulation part, for regulation, RBI is regulating the banks uniformly for all banks, but NBFCs are being regulated based on their asset size mostly. Some are systemically important, some are non-systemically important, some are deposit taking. So different types of NBFC, microfinance institutions are there, infrastructure finance companies are there, so asset reconstruction company. There are different types of regulation are available for different types of NBFCs. Banks can accept demand deposits, whereas NBFC cannot accept. Cash reserve ratio is applicable for banks. Statutory liquidity ratio applicable for banks, but for NBFC, only for deposit taking NBFC, 15% of the deposits are required to be kept in liquid funds with banks or in government bonds. But for non-deposit taking NBFC, there is no provision or requirement for statutory liquidity ratio. Banks are part of payment and settlement system, whereas NBFC are not. There is no coverage for NBFC's deposits from DICGC, no requirement for priority sector lending target. And also an important aspect, that is lender of last resort from RBI, is provided to the banks. As per RBI Act section 18, RBI, whenever there is any difficulty in any banking system or any specific bank, RBI provides or RBI lends to the bank under section 18 to reviving that bank. So LOLR means lender of last resort. So for banking system, RBI is the lender of last resort. But for NBFC, this facility is not available in RBI Act. So RBI cannot directly lend to an NBFC. But indirectly, if you see the recent trend, during COVID period, there are several measures RBI has taken, government has taken, where liquidity was infused into the NBFC sector through indirect mode. And Surface Act, this is applicable only for NBFC NDSI, that is non-deposit taking systemically important entities, and some deposit taking entities also, and only as on Government of India August 2016 instruction or notification 196 NBFCs have been covered under this Surface Act applicability, but not the small size NBFC. We come to the categories of NBFC. For the purpose of registration, there are two types: non-deposit taking and deposit taking. One is type 1 and type 2. Type 1 means those who does not have any customer interface and does not have any public funds in their balance sheet, and type 2 are those which have customer interface and public funds, or both. And for the purpose of registration, NBFC is again categorized into non-deposit taking systemically important entities and non-deposit taking non-systemically important entities. So these entities are mostly number is more in our eastern area. And as on 31st March 2021, number of NBFCs registered with RBI is 9680. 11 categories of NBFC based on activities, 52 deposit accepting NBFCs, out of which around only 20 are actively accepting deposit. 319 are systemically important entities, and total asset size of all these NBFC is 39 lakh crore. So these are the various types of NBFC based on their activity, like NBFC ICC, that is Investment and Credit Company, which is a combination of finance, investment and loan companies. This is after harmonization of investment company, asset finance company and loan companies. This specific category has been redesignated as NBFC ICC. Right side is the number of such entities. Number of microfinance institutions is 96. Infrastructure finance company are 9. Infrastructure debt fund, which is also a type of NBFC, is 4. Factors, which is also a kind of NBFC, doing factoring work on receivables, it is 7. Core investment company. Number of core investment company is 65. Asset reconstruction company 28. P2P. P2P is peer-to-peer lending. They are also a new type of NBFC. RBI has started giving certificate of registration of this kind of NBFCs, which are acting as a marketplace for lending purpose. They themselves are not lending, but they are facilitating the lending between the customer or borrower and the lender. Account aggregators, a special kind of NBFC. Housing finance company. Now you may be aware that housing finance company were earlier it was regulated by National Housing Bank, but this has now regulated by RBI only, and supervision will continue to be looked after by NHB. There is also a mortgage guarantee company. Only one mortgage guarantee company is as of now is licensed by RBI, that is India Mortgage Guarantee Corporation, which is doing mortgage mortgage business. They are providing guarantee on the mortgage. So these are the 11 types of NBFCs available as of now, under which RBI is issuing certificate of registration. This is the trend over the last 5 years. Just a minute, and take a call. Just a minute.
Yes, sir. Yes, sir.
Friends, in the meantime, I would like to inform that as the bank audit and bank branch audit and statutory audit are also in the corner, your study circle is planning a bank branch audit session on 22nd and 23rd of this month. 22nd and 23rd of this month, and we have speakers like Mr. Dhananjay Gokhleji, Srinivas Josiji, and on the second day we have T.S. Premnath, who is a regular speaker at our study circle, and we have Mr. Sonawala from Bombay. Again, this is a virtual session, so if you have not yet registered, kindly register, as the seats are very limited to 300. And bank branch audit, everyone would like to attend if you are getting a branch allocation. Although the list has not come to the bank for the branch allocation as of now, but in a day or two or within a week's time, it will be there. So if you all are interested, do visit our link for the registration, which is same as given for this session, and you can register for the bank branch audit session as well. I'm sharing the link for your reference. And if you have any question in regard to NBFC for sir, you won't be able to unmute yourself. So because we don't want any unavoidable disturbance at the background, you can write your question in the chat box itself. And sir will take all the questions before he leaves, whatever is possible with the paucity of time. And he will answer to the question. So kindly take all the write all the questions in your chat box.
Sorry, one important call came from our
No problem, sir.
head office.
No problem. Yeah, no problem, sir.
So thank you being with me. So this, I think, let's see whether now my screen is still visible.
Yes, sir.
Hello?
Yes, sir.
Yeah. Okay.
Yes, sir.
So,
Visible, sir.
Yeah. So this is the trend of this various financial parameters for NBFC sectors. You could see that there is a consistent decline in the number of NBFC over a period of last 6 years, and however the asset size is continue to increase. So as I said in the earlier slide that as on March 31st, 2021, the asset size of these NBFCs is around 39 lakh crore and loans granted is around 26 lakh crore. So there is definitely a consolidation going on in terms of the number, and RBI also has taken certain proactive steps in weeding out those NBFC which are not complying with RBI guidelines, not uploading the returns in time. As you may be aware that RBI this is comparatively a lenient regulator in comparison to MCA, I would say, because many NBFC, small size NBFC, what I have observed that they are not uploading the returns or statutory audited certificate in Cosmos for the last 4 or 5 years also. So what, but so far though we have not taken any action. Only recently, I think last 2 years we have started taking action, and we have cancelled around 700 odd NBFC in Kolkata itself, which are found to be untraceable. Untraceable means, according to our this SOP, untraceability criteria is that those who are not uploading the regulatory returns in Cosmos for the last 2 years and not uploaded the statutory audited certificate for last 2 years. So we have already cancelled around 700 odd NBFCs, and again we are taking some action, and already you might have seen also some so-cause notice have been issued, which have been marked to some those auditors of NBFCs also. They please pursue with this NBFC to upload the returns, upload the statutory auditor certificate. Otherwise, RBI will have to take regulatory actions by cancelling the CUR. So this process is going on, but the financial items which is displayed here, if you see the gross NPA percentage, it is 6% as on 31st March 2021, and it is much less compared to what the banking sector is gross NPA. If you compare the banking sector's GNPA ratio, it is much less. NBFC sector is doing okay, I would say. And CRAR also is good, it's 26%. So from financial parameter wise, NBFC is doing better than the banking sector. This is the number of NBFCs in Eastern region. If you see, around 4,583 out of 9,500, all India level, 4,500. It is almost 50% NBFCs are in the Eastern region, and out of that, almost 95% NBFCs are located in Kolkata, 4,433. But if you see the systemically important non-deposit taking NBFCs is only 32, whereas there is no deposit taking entities, and asset size is only 2.21 lakh crore of this eastern area NBFCs in comparison to 39 lakh crore of all India NBFC asset size. So you can do the comparison. It is only 3-4% of the asset size of the all India level, but number wise it is 50%. And this is the extant regulation for NBFC sector. You are aware that there is a lighter touch regulations for NBFC sector in comparison to the banking sector, and there are two types of NBFC, which is deposit taking and non-deposit taking. Out of non-deposit taking, because in the eastern area only non-deposit taking NBFCs are available. So size above 500 crore and more is significantly important entities, and for them, what are the regulatory prescriptions from RBI is also mentioned here in the table here, like CRAR, that is capital to risk weighted asset ratio, that is applicable for A category, that is significantly important entities. 15% CRAR is required to be maintained. Out of that, 10% is required to be 10% has to be in tier 1 capital. That is tier 1 capital to risk weighted asset ratio should be 10%, and overall CRAR, capital adequacy ratio, should be 15%. But this is not applicable for smaller size NBFC or non-significantly important entities having asset size less than 500 crore. Leverage is applicable for NSI, that is non-significantly important entities. Leverage means this outside liability divided by total assets, or you can say the debt equity ratio. Exposure norms is applicable for significantly important entities. For 25, 40, I have mentioned 25 means, this 25 means single party exposure, and 40% is the group borrower. So that is the exposure limit for NBFC, but it is not applicable for NSI. Npa norms is 90 days for SI and 180 days for NSI. And standard asset provisioning is 0.40% of the outstanding amount, whereas for this non-SI, it is 0.25%. Corporate governance is required to be implemented for significantly important entity. Disclosure norms is required. KYC norms is applicable for both types of NBFC, and fair practice code also is required to be adopted by these both types of NBFC, whether it is significantly important or non-important. And there are specific regulations for microfinance institutions, IFC, that is infrastructure finance company, mortgage guarantee company, factors, and housing finance company. But if you see that type 1 NBFC, which is no public funds, no customer interface, for them there is no KYC requirement, no fair practice code, no concentration limit, nothing is applicable for type 1 NBFC, which does not have, because they are not having much concern from the perspective of Reserve Bank, because they don't have any public funds. So if there is no public funds, RBI is not much concerned. And now this is also an important slide, I would say, that is how the calculation of net own fund of NBFC is being arrived at. Because there are a lot of confusions. So the guideline is already there. If you, as Mr. Bhutoria has already spoken that very recently, just 2 days back, that guidelines for both NDSI and non-SI have already come out. You can go through these guidelines. Everything is mentioned in that guideline. It's a big size circular, I would say. Number of pages, many pages are there. So everything is available there. But here it is mentioned in nutshell. First, we have to calculate the own funds. How to calculate the own funds? So first, paid up capital, free reserve, preference shares. All these things are added. And from there, deduction we have to make accumulated balance of loss, deferred revenue expenditure, deferred tax asset, and intangible assets. If we deduct the first deduction one, we'll get from this paid up equity capital, we'll get the own funds. And from own funds, again, we have to see if this Nbfc is having investment in equity or debt in subsidiaries, also have investment or loan to the companies in the same group or other Nbfc. So that also is required to be deducted, but there is a limit for that. If the deduction is less than 10% of own funds, it is ignored. But if with the deduction, that is investment in equity or debt and subsidiary and companies in the same group is more than 10% of the own fund, then the excess 10%, the excess 10% is required to be deducted from the own funds to arrive at the net own fund figure. So this is the calculation, and net own fund is equivalent to core capital, tier 1 capital. So I hope it is clear.
Yes, sir.
Okay, thank you. Now another issue also, we find that the companies and even auditors are also having some confusions. Companies in the same group, or which are the, at the time of calculation of net own fund in the statutory audited certificate, what definition should be taken into account while calculating the exposure of this Nbfc in the subsidiary or in the same group companies. So I'd like to mention here that we are followed here. We are followed by, or we are following the section 371B of Companies Act 1956 for calculation of net own fund while taking the companies in the same group. So this is only for calculation of net own fund, that is Companies Act 1956, which says that not less than 1/3 of the total voting power with respect to any matter relating to each of the two body corporate is exercised or controlled by the same individual or body corporate, or if the holding company of the one body corporate is under the same management as the other body corporate, means management is same. So these are the 3-4. I have not picked up all the subsections, but mainly these are the 3 subsections from 371B of Companies Act 1956, based on which we are defining these companies are in the same group of that Nbfc, and we are arriving at the NOF calculations. while determining the exposure of that of one NBFC into the subsidiaries. But in the master direction, also we have defined the group companies as per accounting standard based on the various types of relationships like subsidiary, parent, joint venture, associate, promoter, promotee relationship as per SEBI regulations for listed companies. So these group companies definition is for all other purpose. But for NOF calculations, we are taking the 1956 Companies Act section. So these please be noted because there are a lot of confusions amongst the companies as well as the auditors. So
Yes, sir.
this needs to be clarified. Okay. Then I'll talk about certain specific types of NBFC. One is core investment company, whose principal business is mainly, it's an investment company, and 90% of its assets are in the form of investment in group companies only, and 60% of its total asset as investment in equity share in the group companies. So it is a kind of holding company, and they don't generally trade with the investment in group companies except for block sale. Only for block sale purpose they can buy or sell these shares. Otherwise, they are generally a holding company. The example is, say, Tata Capital Limited. And there is another type, microfinance institutions. We are guided by this Microfinance Mfi. There is a separate circular for MFI entities. It's a special type of NBFC, and they should have 85% of their assets, which is to be qualified assets for being an NBFC. What is qualifying assets? Qualifying assets means that they are mainly small size loans, less than 30,000 rupees, and these loans are disbursed to the rural households having annual income of less than 1,60,000. And if it is disbursed to urban or semi-urban household, then that household's income criteria, annual income criteria, should be less than 2 lakh, less than equal to 2 lakh rupees. Then indebtedness of the borrower should not be more than 1,25,000. So these and loan should be without any collateral. So these are the criteria for being a qualifying assets. And in net own funds to be maintained by MFI is 5 crore. Examples are Arohan Financial Services Limited, Spandana Spurti. Then peer-to-peer lending. It is a loan facilitation via online medium. So they are themselves are not lending, but they are facilitating the lending through online medium. And there is a restriction for a lender to all borrowers across all P2P platforms. Should not be more than 50 lakh rupees. Account aggregator. Account aggregator is a type of NBFC which is consolidating, organizing, and presenting this financial information of a customer to the customer itself or to any financial information user. This is now, if you in the last budget also, not last budget, I would say the previous budget, not this year budget, previous year's budget. This account aggregator framework, our finance minister has talked about account aggregator framework for extending loans to the MSME, because MSME customers, they don't have proper this credit score. So, without credit scores, banks or NBFC are find it difficult to extend loans. But once this account aggregator framework, with the help of seven or eight banks, they have joined hands, including SBI, HDFC, and ICICI. They are planning to have an account aggregator framework under which they will be consolidating the financial information of the customers, and it will be available based on consent of the customer to the financial information user, so that extending loans to the to those borrowers who don't have much credit history, that can be done. Now, scale-based regulation, that is going to be effective from October 1, 2022. And here in that circular, RBI has spoken about 3 layers: base layer, middle layer, upper layer of NBFCs, and also a top layer based on bank's discretion. Top layers will remain empty, and only at the discretion of the bank, some of the 1 or 2 upper layer NBFC can be shifted to top layer. But the base layers are those NBFCs whose asset size will be less than 1,000 crore, less than equal to up to 1,000 crore asset size are coming into the base layer. And they are always, they should be non-deposit taking entities. And middle layer above 1,000 crore and deposit taking. And upper layer will be top 10 NBFC will definitely be in the upper layer based on their asset size, and another 40 NBFC also based on the various criteria like size, complexity, interconnectedness. These 40 NBFC, total 50 NBFC will be placed in the upper layer, and they will be subjected to bank-like regulations. What we have seen earlier, that I'll come to that, what kind of regulations we have planning to propose. And the arbitrage the NBFCs are enjoying, that is going to be plugged in this NBFC scale-based regulations by RBI. I've spoken about this upper layer: size, interconnectedness, complexity, supervisory inputs. So these are the factors for considering those NBFC in the upper layer, and rest will be in the middle layer and base layer. And some of the NBFC, like peer-to-peer type 1 NBFC, account aggregator, non-operative financial holding company, they will be always in the base layer. And deposit taking entities will be in middle layer. Housing finance company, infrastructure finance company, core investment company, they will be in the middle layer. And investment and credit company, the blue rectangle here, what I intended to mean that investment and credit company, microfinance institutions, factors, mortgage guarantee company can be placed in any of the layers based on their significance and the size. Say, suppose MFI, and MFI of size, say 10,000 crore, and it has having huge borrowing, so and interconnectedness also. So it can be directly placed into the upper layer. An investment and credit company, it is a having huge asset size, say around 15,000 crore. They can be placed in upper layer. ICC can be placed in middle layer also. And if the ICC is having less than 1,000 crore, then it can be placed in base layer. So these are the way we are planning to categorize this NBFC in 3 parts. And the regulations, what we have suggested that net own fund will be increased to 10 crore by March 31st, 2027 with a glide path of 2 crore to 5 crore, 5 crore to 10 crore. So step by step, by 31st March 2027, this 10 crore limit will be arrived at. And Npa norms for all NBFCs, it will be 90 days. Already for significantly important entities, Npa norms is 90 days. But even for base layer NBFCs, this same norm will be 90 days norms will be applicable for categorizing NPA. And there is also a glide path by 2026 will all NBFC has to fall in line of 90 days overdue norms of NPA. And board experience also means at least one of the directors with relevant experience in a bank and NBFC should be in the board. And another instruction is that ceiling of 1 crore per borrower for financing subscription to IPO. This is effective from 1st April 2022. Whereas the entire scale-based regulation is applicable from 1st October 2022, but this specific instruction, that is IPO financing per borrower of 1 crore, that is applicable from 1st April 2022. Then there are changes in capital regulations, and right now to CRAR 15% is there, which is covered only credit risk as per Basel I and expected credit loss model based approach with a prudential floor. Prudential floor, because although NBFC is are maintaining or that impairment loss is being arrived at using ECL model, but it should not be less than the IRAC, because simultaneously IRAC provisioning also is required to be done, and if ECL model provision is less than the IRAC model provision as prescribed by RBI, then the shortfall will be derived from net profit after tax, net profit or loss after tax, and put into investment valuation asset. Investment reserve. That is the prudential floor is requirement of prudential floor is there. For middle layer under scale-based regulation, the circular has proposed that the board approved internal capital adequacy assessment process based on the credit risk, market risk, and operational risk, and all other residual risk that has to be calculated. So, if you, I'm not going into the details. There are under scale-based regulations, capital requirement is be more. Then exposure norms. As of now, this for it is applicable for NDSI only, and now under scale-based regulation for middle layer and upper layer, this lending and investment that is clubbed now. That is a single party borrower, single borrower or party. Earlier it was 15% lending, 15% investment, and total is 25%. But now it will be merger of this lending and investment into a single exposure limit, but the exposure will be 25%. But it will be both lending and investment together, not to exceed 25% of the own funds. And sorry, it was earlier, it is own funds, but from 1st October 2022, it will be calculated. The denominator will be Tier 1 capital, not the own funds. Just a minute.
Yes, sir.
So this exposure norms, the denominator earlier was own funds, now it will be tagged to Tier 1 capital. Now under the scale-based regulation, another proposal is to introduce exposure to sensitive sector. So far, for NBFC sector, no norms is there for exposure to sensitive sector. The first time in the scale-based regulation, this exposure to capital market and commercial real estate will be reckoned as sensitive sectors. However, RBI will not give any specific limits. RBI has said that it will be board approved internal limits for sensitive sector exposure for both commercial capital market and CRE exposure, that is commercial real estate exposures. Because what we have observed, so many of these NBFCs are having huge exposures in CRE sector or commercial capital market exposure. So RBI has stated that there should be board approved internal limits based on the risk proposition in this NBFC. And there are other restrictions on loans and advances to directors, relatives, entities with major shareholdings, loans and advances to senior officers of this NBFC, and for upper layer large exposure framework similar to what for banks, banking sector, the regulation is there. Similar regulation will be has been proposed for upper layer NBFCs also. And the scale-based regulation has also proposed guidelines on governance matters also. For base layer NBFC, risk management committee at the board level or the executive level has to be framed. There should be more disclosures on loans to directors, senior officers. More this customer complaints are that grievance redressal cells to be on customer complaints also. Disclosure should be there in the balance sheet. For middle layer and upper layer, key managerial personnel KMP shall not hold any office in any other NBFC middle layer or upper layer except directorship in a subsidiary. Independent director cannot be in the board for more than 3 NBFC. At the same time, chief compliance officer are required to be appointed. And there is a guideline on compensations also, which has to be board approved compensation guidelines on also should have a fixed and variable pay, malus and clawback provisions, whistleblower mechanism, core banking solutions. Recently, RBI has come out with guidelines also that 10 and more branches of an NBFC, they should adopt the core non-banking systems, non-financial systems, core non-financial system for NBFCs which are having 10 or more branches. And there is a glide path of 3 years. And for upper layer, there are certain qualifications for board members, listing and disclosures norms. Also, removal of independent directors. In case any independent director is removed or the independent director resigned on its own before completion of the normal tenure, then it has to be reported to the supervisor. And supervisor also will independently will talk to the independent director and get the facts why he has resigned before his normal tenure, and if he has removed, then why he has removed by the company. That also clarification is required. Then certain guidelines like appointment of chief risk officers, which have been issued in May 16, 2019. NBFC having asset size 5,000 crore and above, they have to appoint one chief risk officer. And liquidity risk management framework for NBFC, more granularity in the maturity brackets. That is, maturity brackets means maturity of their liability, and like almost similar to what banks ALM, asset liability management, we are calculating the similar, almost similar techniques for maturity buckets will be for mismatch of inflow and outflow will be calculate. We are calculating now for NBFCs. NBFCs, those are significantly important entities. So we are collecting the information on a monthly basis to review their asset liability positions. Then liquidity coverage ratios for NBFCs having asset size of more than 5,000 crore and above. LCR means the stock of high quality liquid asset divided by a stock of high quality liquid asset to be maintained by the NBFC shall be minimum of 100% of total net cash outflows over the next 30 calendar days. And this is applicable for bigger size NBFC. And LCR is already applicable for banks. Now it is gradually being applicable to NBFCs also. Okay. And now there is a lot of complaints, I would say, about digital lending apps, which have recently we have been observing, and these digital lending apps, it was sometimes found that they don't have any tie-up with any NBFC or banks. They are independent entities. Sometimes some Chinese people, they are the promoters of these digital lending apps, and they are lending to the very small ticket loans to small businessmen or student communities, especially during this COVID period, when getting a loan from banks or other regulated entities like Nbfc or small finance banks are become difficult because they were not always open in COVID period, and that time there is a mushroom in growth of this digital lending apps. But considering the number of complaints received by RBI, we have come out with the guidelines in June 24, 2020, and subsequently one working group was also set up under the chairmanship of one of the executive director of RBI. Working group has submitted its report, some with recommendations, and final guidelines is yet to be issued. But the guideline which are already in existence from June 24, 2020, it says that those digital lending platforms, they have tie-up with the banks or NBFC. They must adhere to the Fair Practice Code and outsourcing guidelines, and banks and NBFC cannot diminish their obligations while outsourcing their lending activities through digital lending apps. And in the website of the regulated entities, RE means here regulated entities, names of the platforms has to be indicated on the website of the regulated entity, names of these digital lending platforms. And the digital lending platforms also have to disclose the name of its regulated entities, means who are behind these digital lending apps. They have to disclose these names upfront to the customer while lending to them. And the sanction letter, the loan sanction letter should be on the letterhead of the regulated entity, and the regulated entity will be responsible for regular oversight and monitoring of these digital platforms. And the regulated entity must create awareness about the grievance redressal mechanism, because that is the main issue what we have been observing. I'll come to the recommendations here. Yeah, this is the recommendation of the group, which says that the digital lending apps should be verified by a nodal agency to be set up by this Nbfc or one SRO. It's a self-regulatory organization will be set up, and it will have the responsibility of checking that there is no unsolicited commercial communication for digital loans to the customers. And SRO will maintain a negative list of lending service provider, these digital lending apps. And there should be a standardized code of conduct for recovery. That is very important from RBI side, because there is a often complaint comes that there is a harassment to the customer, or the contact list of the customer is being shared, and even the parents of the students are being pressurized, although they are totally unaware that their children has taken the loan, and without any proper KYC, loans are being disbursed. So RBI has proposed that there should be a separate legislation to prevent illegal digital lending activities. RBI is okay with Nbfc and banks providing lending facility through digital lending apps. That is completely legal. But illegal digital lending activities, separate legislation RBI has proposed it to the government of India also. Recently, there was a Act on deposit acceptance. Some of you must be aware that banning of unregulated deposit scheme act 2019 it was passed in the similar, that is for deposit acceptance. In the similar manner, banning of unregulated lending acts also is proposed. And some technology standards, disbursement of loans directly into the bank accounts of the customer, servicing of the loans only through the bank accounts, and all the data pertaining to the customer should be in the servers located in India. And RBI has also, this working group has also recommended that algorithmic features used in digital lending to be documented, because whenever digital lending app is disbursing loan to a customer, it is the credit worthiness of the customer is based on totally on artificial intelligence using algorithmic features. So that features is required to be documented to ensure necessary transparency, so that in case RBI goes for scrutiny of this NBFC or banks, they can, RBI inspecting officer should verify what kind of, what are the steps involved in assessing the credit worthiness of the customer while disbursing the loan. So now I will come to the another guideline regarding that auditor, appointment of auditors. And as Mr. Bhutoria has rightly said that non-deposit taking NBFCs with asset size below 1,000 crore, they have the option to continue with the existing or extant procedure, that is 5 years, and again with an audit firm for 5 years and reappointment by another 5 years. And those NBFCs having asset size of more than 1,000 crore, they are required to follow these guidelines. Like for commercial banks and urban cooperative banks, they are required to take approval of RBI for appointment and reappointment of statutory central auditors and statutory auditors on an annual basis. Whereas for NBFC, there is no prior approval is required, but they have to inform RBI each year by way of a certificate in Form A within 1 month of such appointment. And there are certain criteria. Those NBFC having asset size of 15,000 crores, they are required to appoint minimum 2 audit firms. Minimum number of 5 partners are required to be associated with these firms for at least 5 years. And joint auditors there, then it should be ensured by the NBFC that joint auditors of this NBFC do not have any common partners, and they are not under the same network of audit firms. Entities with asset size less than 15,000 crore up to 1,000 crore, 1 audit firm and minimum number of 5 partners. And tenure and rotation of these audit firms is 3 years. So an NBFC having asset size of more than 1,000 crore, the tenure of the audit firm is 3 years, and they are eligible for reappointment for another term of 3 years. So earlier it was 5 years and reappointment for another term of 5 years. Now it will be curtailed to 3 years, 3 plus 3. And maximum auditing for an auditor can concurrently take up statutory audit of maximum 4 commercial banks, including not more than 1 public sector bank and or 1 all India financial institutions like NABARD, SIDBI, NHB, Exim Bank or RBI. So RBI is also included in that 4 entities of banks. 8 urban cooperative banks, and 8 NBFC. And 8 NBFC is irrespective of the asset size. Even this is there is no asset size criteria. It is whether it is 10 crore, 2 crore, or 1,000 crore. Maximum NBFC that can be audited by an audit firm is 8. And this is the Form A through which the NBFC has to inform RBI regarding the appointment of auditors every year. Some clarifications regarding what already it is available in our website also, that 1 year time gap between non-audit work of by the auditor for the entities or any audit, non-audit works of for its group entity has to be ensured for all entities or the RBI regulated entities in the group. RBI has clarified that it is for the RBI regulated entities in the group. So if it is a not regulated by RBI, if an entity within the group which is not regulated by RBI, it is the responsibility of the board or audit committee of the board or local management committee of the board to ensure that there is no conflict of interest and independence of the auditor is ensured. And this should also be suitably recorded in the minutes of the meetings of the board, ACB and LMC. And group entity here, the group entity means as per the master direction. In the beginning, I have spoken about that for group entity, we have to follow the master direction. But while calculation of net own fund, we have to follow the definition of group entities as per Section 371B of Companies Act 1956. Then another clarification RBI has given that if any partner of a CA firm is a director in any entity, the said firm shall not be appointed as a statutory auditor for any of the group entities of that entity. Then here also, whether this entity is any entity or RBI regulated entity. So here RBI clarifies that that entity is only for RBI regulated entities in the group. If it is a non-RBI regulated entity, then it is the board decision, ACB's decision to see that there is no conflict of interest. And another clarification, whether the entities are required to look back for 1 year regarding any non-audit works for the entities or any non-audit works of the group entities before appointment of an audit firm as a statutory auditor for financial year 21-22. Here RBI says that it is applicable prospectively, that is from 22-23 onwards. Large exposure, that also has been clarified. And another clarification regarding this limit of audit for core commercial bank 8 ECB, UCB and 8 NBFC for an audit firm in a year is applicable to audit with asset size below 1,000 crore also. Here RBI clarifies it is this limit is for all RBI regulated entities irrespective of the asset size. So even 2 crore companies also will be taken as an RBI regulated entities and within this 8 restriction. Then on February 3rd, 2021, RBI has come out with a guideline regarding risk-based internal audit. That is for NBFCs, HFC and deposit taking NBFC, which are having asset size of more than 5,000, and that will be their own internal audit, that is risk-based audit, because RBI has earlier instructed that above 5,000 crore NBFC should appoint one chief risk officer. They should have a risk management committee at the top, and chief risk officer will directly report to the board. So this taking that cue, RBI has said that bigger size NBFC should adopt risk-based internal audit, and declaration of dividend by NBFCs. There are certain criteria are required to be fulfilled. CRAR has to be more than 15%. Net NPS should be less than 6%. The NBFC should complying with the section 45 IC, that is transferring 20% of their net profit to statutory reserves, and ceiling is 50% of the dividend payout ratio. That much declaration of dividends by NBFC. But for small size NBFC, that is so not small size, type 1 NBFC, there is no such limit or no such ceiling regarding declaration of dividend. Application September 13, 2021, these guidelines regarding application for Aadhaar EKYC authentication license, KUA or sub KUA license. Now RBI has permitted NBFC to carry out authentication of client's Aadhaar number using EKYC facility provided by UIDAI. So online verification of a client can be done by NBFC, and that EKYC authentication license is also NBFCs are eligible. Appointment of internal ombudsman, that is in November 15, 2021, and applicable for NBFC deposit taking having 10 or more branches, and NBFC non-deposit taking having asset size of rupees 1,000 crore and above, 5,000 crore and above, and ground of complaint is deficiency in service. Ombudsman in all NBFCs are required to appoint internal ombudsman, and earlier there may be a complaint redressal committee, or there is a mechanism for redressal of complaint in the NBFC on deficiency in the services rendered by NBFC. But the internal ombudsman, his duty will be to deal with those complaints which have been already examined by this grievance redressal committee, and but it has been rejected fully or partly by the NBFC. So those complaints only will be dealt after by the internal ombudsman, and all NBFCs are required to appoint internal ombudsman. In December 14, 2021, RBI has come out with a prompt corrective action framework for deposit taking and non-deposit taking. This will be applicable from next year, that is financial year 22-23 onwards. Earlier, or you can say that prompt corrective framework is only applicable for banks as of now, but for NBFC it has now been introduced. Earlier we have a framework, such kind of framework, what is called corrective action framework, CAP. That has been now upgraded to PCA framework, and certain restrictions are there. Some restrictive measures RBI will take under PCA framework to discipline the NBFC. which are not falling in line. And November 12, 2021, IRAC provisions, that was also a sensitive issue because FIDC, that is NBFC's SRO, they have taken up the matter with RBI regarding this upgradation of NPA to standard accounts, or this day-end processing, when a 90 days day-end processing it becomes NPA. So that guidelines for IRAC provision recently has been extended, or it has been extended time has been given till September 30, 2022 to put in place the necessary mechanism to implement the provisioning mechanism, IRAC provisioning mechanism. So loan accounts classified as NPA can be upgraded to as standard assets only if entire arrears of interest and principal are paid by the borrower. Earlier, what our inspecting officers, when they visit the bigger size NBFC, they used to see that even with the interest amount only, the account is being upgraded from NPA to standard assets. Whereas the installment of the principal, that has not been paid for the last 3 such installment is overdue. But still, interest portion is arrived at, has been received, so account becomes standard from NPA. So that loophole is being plugged in this November 21 instruction. It says that unless both the EMI amount, arrears of interest and principal are fully paid by the borrower, the account cannot become a standard asset. And 90 days out of order status for CCOD account, at the day end of 90 days, account will become NPA, which is applicable for the banks. But so far it was not applicable to the, some leeway was given to the NBFC. Now this applicability will be there from September 30, 2022 onwards. So I think I have covered most of the things. So thank you. In case of any questions, I'll take.
Yeah, okay, sir. Thank you so much. There's many questions are there. I'll try to take a few of them. Sir, the most questions are revolving first around this the 27th April circular. So as you have said that the limit of 8 applies irrespective of the asset size. Therefore, if any NBFC is doing a audit of only NBFCs with even less than 1,000 crores, the limit of 8 will apply, sir, to them.
This is the clarifications that maximum 8 NBFCs irrespective of their asset size.
Irrespective of asset size.
Yeah, whether it is 1,000 crore or 2 crore, 5 crore, maximum okay. 8.
And but sir, for these companies, as you had said that the procedure, those companies can go for their extent procedure. This means whatever qualification norms are there in the circular of 27th April, as far as it relates to what should be the number of professional staff, whether CISA qualified or not, number of partners, that is not applicable to those smaller NBFCs.
No. This is applicable for NBFCs which is having asset size of more than 1,000.
So, but sir, now there are questions where Form A, when all companies are asked to file Form A. Now, Form A is for companies having asset size more than 1,000 crores. So, how an auditor will fill Form A, how the company will fill Form A, or it is just an intimation?
It is just an intimation. It is, okay. See, for NBFCs having asset size less than 1,000 crore, it is same as per Companies Act 139, what you are following, that tenure is 5 years, then another 5 years extension, that is still in vogue.
Okay.
Because this circular is applicable only for 1,000 crore and above assets.
So in that form, they can give the intimation because
Yeah, only for intimation purpose.
only for intimation. Okay.
Yes.
Okay. Sir, there is one question that as far as XBRL issues are concerned, people are facing some issues with DSC and for DNBS 13. So what they have said that they have written a number of mails, but this is not resolved. So how to get it resolved, sir?
Actually, we plan to have a session on XBRL also today, but very soon, maybe next month, early next month, we are planning to call all the NBFCs for a online training.
Okay.
So I think we shall be able to clarify those issues
Okay.
to the NBFCs at that time.
Okay.
And meanwhile, if you have any such issues, I think if you route your clarifications through the NBFC, because see, directly we cannot handle the questions from the auditor.
No, sir, they have written. No, sir, they have written. NBFC only has written, and in one question they have said that they have sent more than 10 mails, but reply is not being received.
Actually, certain issues are not being. We are not being able to handle because it is the software level rectification is required to be done. That has to be, that we are forwarding to our head office or to the concerned software developer who has developed it, and will do it. But any policy related issues, not system related issues, if there such kind of issues are there, that has to be forwarded to us through the NBFC, specific NBFC. Then it will be, we'll be able to get it done.
Sir, one question, people are saying that some approvals like change in shareholding, change in directorship requires prior approval. It takes months to get the approval. So how to pass? Because they said that we cannot wait for appointment of a director for fairly long time, neither for change in shareholding. Now it takes months to get such approval.
I understand there are issues in staff strength. Our staff strength is dwindling, but the rate of dwindling of staff strength is not commensurate with the rate of dwindling of the NBFC. You see the number of NBFCs in the, and every day there is some kind of this regulatory request we have been receiving from the at least 10 to 12.
Okay.
And nowadays, so everybody knows our email ID. So email communications we have been receiving. Mostly we are receiving email communications, and we are doing it. But in certain cases, whenever there is a clarification is required, we are asking for clarifications. But I would say that if you go through the instruction, master direction, as you have said just now, that recently RBI has come out just 2 days ago, the master direction has been updated.
Yes.
So if the our friends go through the circular, everything is clearly mentioned in that circular. What are the documents required for change of name, change of management, change of shareholding, shifting of NBFC, everything is mentioned there. You follow the guidelines and submit all the documents in one go, it will be done.
No, sir.
It will be done quickly, I can say.
Sir. The issue raised by the member is that it is all being submitted, but then despite many reminders, they are not getting approval. They have followed the directions because everything, as you said, is mentioned in the direction. but approval is taking time. How to expedite that?
That is a bit difficult. We'll see.
Oh, sure, sir.
अगर बहुत ही ज़्यादा pending हो गया है,
हाँ.
तो you can mention it or the DOS Kolkata email ID में you can forward. We'll see.
Sure, sir. Sir, the question is there, if an NBFC, which was earlier not an NBFC, but it is now fulfilling the criteria of NBFC, whether it is now required to get registration. It was earlier not an NBFC, but now it is fulfilling the criteria of an NBFC. So therefore, it can apply for registration?
Yes, yes.
Okay.
In Cosmos website, one does not need to have a user ID or password in Cosmos for applying for a registration, fresh registration. You have to just download all the documents, fill it up, and online they can submit it to cosmos@rbi.org.in, and it will be scrutinized at our central office level. Earlier it was done at the regional office level, that is at Kolkata level, but now it is centralized, and at the central office level they will scrutiny all the documents, and based on the eligibility criteria, if everything is fulfilled, it will be done. And it is a issue actually. NBFC, one company is fulfilling all the criteria of NBFC, and sometimes the auditor is also submitting the exception certificate. Then we have to grant a COR for carrying out the Nbfc.
Sir, one point, this November 15 and February 22 circular on that Npa norms, which you said, which talks of 90 days. So, but for non-systemically important, the Npa time limit is 180 days. So therefore, whether this circular will also apply to non-systemically important companies, these two circulars?
No. It is only applicable to the NDSI.
NDS.
That is,
okay.
Yes, that is 500 crore and above.
Above. Okay.
Because they are already on this 90 days overdue now. Okay. 500 crore and above.
Okay.
But now from October 1, 2022, although we will be migrating to scale-based regulation, but still 500 crore and above will continue to follow the this 90-day overdue now, because it is already applicable for them.
Okay. Priyanka, you had one question?
Yes, yeah. Sir, I just wanted to ask one thing, that because you mentioned, right, that you are also facing some issues regarding the technical, clearing the technical queries in the XBRL return. So, sir, I mean, there will be no penalties, right, in respect to that, because what happens is the clients get very agitated that मेरा return नहीं लगा है, अभी तक pending है. So just a small word of a caution from you will be really helpful, that हाँ ठीक है, penalty नहीं लगेगा, there are some issues and we are taking care of that, and as long as you have some kind of a written intimation or an information that ये problem हो रहा है, we will not charge you for anything. So
I think if we have issued the user ID and password for XBRL to all the NBFC who have approached us. But if we compare the performance of Eastern area NBFC with other area NBFC, like say Western area NBFC, our performance is extremely poor, I would say, regarding onboarding of this NBFC to XBRL platform. What we have observed that NBFCs are not very keen in getting onboarded. So in certain cases, some issues may be there, but still many of the NBFC have onboarded. Like around out of 4,500 already, we have onboarded 1,700 NBFC to XBRL. But 2,800 are yet to be onboarded. So there may be issues specific to some NBFC, but if such issues are there, then it is okay. But if intentionally someone is not approaching us despite our persuasion with them, then I think there could be a chance for imposition of penalty. That I cannot give a guarantee. But if there is a specific issue कि मेरा ये नहीं हो रहा है, मेरा अपलोड नहीं हो रहा है, इसके कारण I have been pursuing with RBI, then there is no issue because we are not able to rectify the problem. So we have the audit trail. इसके साथ हम बातचीत कर रहे हैं. You should be that NBFC should be.
There is one FinNet 2 which has been launched, and clients are receiving messages on mobile phones that this FinNet 2 has been launched. You please do principal entity and principal officer registration. And the scheme also says that you will be receiving a mail through which you have to, but nobody is receiving any mails, but everybody is receiving a lot of messages. One person says that I have got 8-9 messages, but I did not receive any mail, and on almost on everyday basis they are receiving mail.
This is FinNet or FIA.
Yeah, from FIU, what they said that we are launching another portal, FinNet 2. From FinNet 1, they are upgrading to FinNet 2. So now entity has to register itself on FinNet, then make a principal officer registration as well. But they said that you will be sending a mail through which you have to log in. But nobody is receiving any mails.
Sir, with the helpline number also, with respect to what Mohit Bhai just said, the helpline number, there are 3 helpline numbers. None of the helpline numbers are valid. The video that is there, which helps in assisting the registration, that is also not very helpful. So, I mean, clients are repeatedly getting these messages. So I have got, every day I get this message, almost every day. I'm getting one message.
Okay, they are a different organization. We'll see. I'll have a talk with our counterpart in other offices also, and get the feedback. And I will ask because whenever we are talking to the government, then we are talking through our central office. So I'll collect the feedback from other offices, and if whatever the issues you have, please Mohit ji aap or Mr. Vivek Agarwal forward kar dijiye. I will take up the matter with our central office.
Okay.
Sir, one last question on this new guidelines which are effective 1st October 2022. So what we believe that once these guidelines come into play, the existing master directions would be substantially replaced. And whether the concept of multiple NBFCs also is there in these new skill-based regulation.
The multiple NBFC?
So like if you are a multiple NBFCs, if the group asset size is more than 500 crore, you fall in the systematic criteria. Now, whether if a group is having asset size more than 1,000 crore, single NBFCs of course falls in the middle layer. Therefore, whether all group entities will fall in the middle layer. So there is because there is no clarity on that. But given that what you have said that the existing directions continue to apply. So there is a belief that yes, this multiple NBFCs even applies to middle layer.
Yeah, actually, if you see our instruction which regarding scale-based regulation, it is not fully it is developed, I would say. Means many aspects RBI said that detailed guidelines is going to be issued shortly. Detailed guidelines on various aspects. So on this issue, although as per norms that if one NBFC is in NDSI group, then that NBFC has to follow the requirement or procedures what the NDSI is following, even though it is a non-NDSI. But whether that will be, I think that will also be applicable in the same manner for a middle layer also. But the criteria will be for 1,000 crore. Once it will be middle layer, means if it is a 1,000 middle layer NBFC, then it will all the NBFC in the group will follow the middle layer requirement for uploading the returns.
Okay. Got it.
लेकिन अभी तक clear cut भी हम भी नहीं बोल सकते हैं क्योंकि guidelines is not very clear so far because all aspects the clear cut guidelines is yet to be. Basic framework has been issued, but detailed guideline is yet to be issued.
Got it, sir. Got it.
Sir, the 1,000 crore asset size, sir, that is calculated based on the Ind AS financials or the IGAP financials, sir. How is it calculated?
I think it will be based on Ind AS guidelines only.
Ind AS only. Thank you, sir. Thank you.
Vivek?
That's it, and we are really thankful to Abhijit ji for taking time from his precious schedule, and we know how busy he stays. And with people like us, he stays more busy. So thanks a lot, Abhijit ji. So I would request Mayur to give a formal vote of thanks to sir.
Thank you, Vivek ji.
Mayur, can you give a formal vote of thanks? Can you unmute yourself?
I think Priyank was supposed to give.
Yes.
Priyank,
yes.
kindly go ahead.
Yeah. Right. Thank you, Vivek Bhaiya. And thank you so much, Abhijit sir, firstly for accepting our invitation and for gracing us with your knowledge and wisdom. It is our immense pleasure to have someone of your stature deliberating on this important topic. You have covered all the relevant points in great detail, sir, and we are highly obliged for you giving us your valuable time and sharing these insights with us and clearing so many queries of our members. We wish to keep interacting and learning from you, sir, and thank you so much, sir. We have a small token of appreciation, sir. This can be seen over here, e-memento for you. Thank you so much, sir, for taking out time.
Thank you very, very much, and it's my pleasure to be with you. Thank you.
Thank you, sir. Thank you so much, sir.
Okay. Bye then.
Okay. Thank you, sir. Thank you.
Now I'll hand over the proceeding to Mayur ji.
Thank you, Vivek ji. We have our second speaker, who basically he has also designed the program for us, and he will be speaking today. I again feel privileged to introduce our own Mohit Bhaiya. CA Mohit Bhutoria is a fellow chartered accountant, insolvency professional, and a registered valuer, security and financial asset class. He qualified as a chartered accountant with 16th rank in India, first in Eastern region, and joined the firm as a partner in 1994, AC Bhutoria and Company. He has been co-opted member of various committees of ICA and professional bodies. He is a regular speaker on company law, taxation, NBFC issues at ICAI, ICSI, MCA, study circles under ICAI, CAG, and other platforms. He has considerable experience and expertise in audit and assurance, corporate law, taxation, valuation, merger and acquisition, wills, and trust and non-banking financial companies sector. We welcome you once again, Mohit Bhaiya, and request you to proceed with your deliberation.
Thank you. Thank you so much, Mayur. Thank you so much. Thank you, convener, for giving me this opportunity, Vivek Agarwal, to speak on our own ACE platform. Thank you, Mayur, for the nice introduction. So, our own AGM, GMRBI has, I think, covered most of the portion of the NBFCs, which we were also supposed to deliberate and discuss. But I'll just try and share some of the finer issues and just glance in next 30-35 minutes to the applicable regulations which are very relevant for auditors. I think, Mayur, my screen is visible?
Yes, Bhaiya, it is visible.
Yeah.
You need to start the slides. Multiple slides are being visible as of now.
Yeah, तो अभी ठीक है?
नहीं, अभी भी multiple slides दिख रहे हैं.
अच्छा, तो
Slide show
ठीक है?
Not yet. अभी ठीक है, it is visible. Multiple slides है, लेकिन visible है.
एक सेकंड. ये दो खुला इसलिए ये प्रॉब्लम हो रहा है क्या? ये हर बार ही प्रॉब्लम होता है.
आप क्या करो ना, आप
फाइन, अभी विजिबल है. फाइन ना.
अभी ठीक है ना?
एकदम भैया.
हाँ, परफेक्ट
है ना? हाँ, ओके. So I'll not dwell upon what Abhijit sir has said. So I think he had taken us through the status, what are the various categories of NBFCs, the number of NBFCs that is there. So these are the applicable regulations. The RBI Act 1934, NBFCs acceptance of public deposit directions. Then we have non-systemically directions and systemically directions. Yeah, here I would like to say these directions, whatever RBI changes have done within the last 1.5 years, all have been incorporated in these directions. So this is very important for us. So as auditors also, plus on behalf of the people who are appearing on behalf of NBFC in this seminar, these two, the major amendments which are done by the RBI in last 1.5 year have been incorporated in the directions. This has directions updated has just come 2 days ago on the website. So one needs to look into this. Then we have the core investment Reserve Bank directions. We have the auditor report directions, fraud directions, KYC directions, Prevention of Money Laundering Act and applicable rules, CIC Act and rules, IBC code. Again, to the great extent, it has some implications on NBFCs as well. Even for us, the auditors, when we advise to the clients, we have the IT directions. We have a scale-based regulation. This regulations, as Abhijit sir also has said in his deliberation, this is effective from 1st October 22. Save and except one point where guidelines relating to borrowings on new issues, the 1 crore limit, this is applicable from 1st April 22. Besides this, a number of circulars have been issued by RBI. One was about digital lending, which Abhijit sir had said. Guidelines on appointment of auditors, declaration of dividend, data format for furnishing of credit information companies, scale-based regulations, prudential norms, PCA, registration of assignment of receivables, registration of factor regulations. Again, there was a revision in the prudential norms, NPA guidelines. Then some online submission of returns, some discontinuation and or merger of online submission of returns relating to fraud and all. Now this earlier there was a system of physical submission of return. Now all return have to be submitted online. Those relating to fraud. Now, some key points in relation to each of the acts. When we talk of RBI Act, as this was a very important contention. Again, there is a dispute between various, regional offices of RBI also. When we do the computation of net own fund, this is very, very important. Now, when we compute the net own fund, we take into account paid up capital, reserves and surplus. Then we deduct the accumulated losses, intangible assets, deferred tax, and there arrives the own fund. From that, we have to deduct certain investments in NBFCs, loans to NBFCs, loans to group companies, investment in subsidiaries, and so on. So one is the definition of companies in the group. As Abhijit sir had said, that the definition you have to take from the Companies Act 1956 and not from the directions which is given there. But many regional offices of RBI are insisting on taking definition from the regulation, from the the prudential norm, the definition of companies in the group from the directions itself. So this is causing a lot of confusion because the definition of companies in the group, as per the systemically or non-systemically important directions, they are quite far and extensive as against the definition of Section 370B. So this is one important point. Second important is relating to Section 145 IC, transfer of profit to reserve fund. Now every NBFC has to transfer at least 20% of profit to reserve fund, irrespective whether dividend is declared or not. This is a mandatory requirement. A question often arises that I have past losses, I have earned in profit in the current year. Even after setup of past losses, I still have losses. Do I need still to transfer to reserve fund? Because what will happen into that extent? Say I have a accumulated brought forward loss of 10 crores. During the year, I earned a profit of 2 crores. Still, there is a net loss of 8 crores. Now, if I have to transfer 20% of 2 crores amounting to 40 lakhs, I am able to transfer that. That is not a problem. But then my loss position increases from 8 crore debit balance. It changes to 8 crore 40 lakhs debit balances. So does it serve any purpose? So representations have been made to RBI in this respect, but we are yet to receive any reply from that. Even on the utilization of reserve fund for the purposes, any purpose like declaration of dividend or declaration of bonus, there are no yet purposes specified by RBI. There is no circular to this effect. One is to seek approval on case-to-case basis, but RBI is quite reluctant when you make any application to RBI for seeking permission for declaration for utilization of the reserve fund. Now we have the acceptance of public directions. So here the relevance is only as far as what is the definition of deposit. So loan from director, loan from relative of director, loan from shareholder, intercorporate loan, these are all exempted deposits. Provided in case of loan from director or relative or shareholder, it should be out of own funds and not out of borrowed funds. And the company every year needs to be pass a resolution within 30 days of commencement that it shall neither accept public deposits nor it does intend to accept public deposits. So basically, this is the only requirement which a non-deposit taking needs to follow. Now we have two directions: systemically important and non-systemically important. So as we said, systemically important directions are applicable to NBFCs with asset size of 500 crore or above, either individually or taken with all other companies in the group. And therefore, if a group has a 3 NBFCs, say of asset size 400 crores, 100 crores, and 2 crores, so aggregate asset size is 502 crores. So all companies will be governed by these SI directions. And even that 2 crore company, which was earlier an SI, non-SI, will now fall in the category of SI directions. Now we have the core investment company directions. We have the auditor report directions. Every company, every auditor, in addition to an audit report which he gives under the Companies Act 2013, is required to give an audit report in terms of NBFC's auditor report directions addressed to the board of directors. So here I like to point you to 3 important facts. Number 1, the auditor report direction says that if during the course of audit you find that the entity has violated any of the provisions of the RBI Act 1934 or directions issued thereunder, then there is an obligation of the auditor to directly report of such non-compliance to the Reserve Bank of India. Therefore, if an auditor in the course of his audit finds that the company, say for example, is required to comply with some prudential norms, was required to intimate or seek prior approval for change of shareholding, was required to become a member of CIC, file returns with CIC, and the company is not doing that, then by virtue of this direction, the auditor is in obligation to directly report to the Reserve Bank of India by way of an exception report. Now, monitoring in fraud directions. So if there happens to be any fraud concerning NBFC, then the company is required to make a report to the Reserve Bank of India. We have a KYC directions 2016. So if the company gives loans, then it is supposed to comply with KYC directions. Now, here I like to point out one thing, that if a company has a customer interface in the sense that it is granting loans. So now, not only the RBI regulations are very important, but if you see the CARO report, which is there in its present form, CARO 2020, it is also very, very relevant, because what we have seen generally in this part of the country, that we say that these are our related parties, we have granted loans. There is no stipulated terms and conditions of grant of loans, that whether it is repayable on demand or whether it will be called after 1 year or 2 year or 3 year. No period is specified. There is no document evidencing giving of loans. So now with CARO 2020, it will create more problem. More so, NCLT is also taking, in some bench, it is also taking an adverse view, specifically when you grant loan to a person without adequate documentation. There have been cases where in the absence of adequate documentation, NCLT said that you are not, that in terms of RBI Fair Practice Code, you need to have an agreement with the between the borrower and the lender. You do not have any agreement. You are just giving us a copy of confirmation of account. This confirmation does not give the terms and conditions. You are giving us Form 26A saying that, look, that other party is deducting TDS on interest. So we will not consider all those things. Unless you have a loan agreement, any document evidencing terms and conditions will not accept your application. So there are many cases where petitions have been filed by financial creditors and NBFCs for recovery of loans which have been turned down by the NCLT. So when it comes to loan, So if I tell you the series of events when it comes to loan, the series of events starts from that you need to have a standard loan KYC document. A client gives a proposal for getting a loan from an NBFC. A proposal form is there, followed with a KYC. So when it submits, then the NBFC will do all the appraisal, and NBFC sanctions a loan subject to the conditions. And when the conditions are complied with, the loan will be dispersed. Within 3 days of giving the loan, the NBFC has to upload the data, the KYC, in the CKYC portal in relation to that entity to whom the loan has been granted within 3 days of giving of the loan. If the loan is secured by a charge on immovable property, beside charges, there is a website of SARSAI. You have to upload the details of charges on the website of SARSAI also. Next, once you give the loan, the copy of all the documents evidencing the loan, that has also to be uploaded in the NESL website. Having all these done on a monthly basis, you have to file returns with CICs. So as of now, there are 4 CICs, and it is mandatory on the part of every NBFC to take registration with all the 4 CICs. So you have to file monthly information relating to credit data of each of the entities to whom you have granted loans, irrespective whether they are standard, substandard, doubtful, or loss assets. So those returns for each of the 4 credit information companies, all the companies are required to file the returns on a monthly basis with each of these 4 CICs. So this is now, once the loan comes for a renewal, what is important is that, say that you have granted a loan for 1 year, and that after 1 year the loan comes for renewal. So you have there has to be a formal proposal from the party giving the loan, borrowing from the borrower company, about the fact of renewal supported by adequate documents. Now the entity NBFC has to appraise the loan and then go ahead with this procedure, whether it intends to renew the loan or not. Renewal for 2 successive, the renewal should only be done when it is found that there is no financial, there is no what you call there is no financial crisis on the part of the NBFCs. Now, if you renew the loan, seeing that this renewal is not account of requirement but on account of financial crisis and the inability of the borrower to serve the loan, this may lead to the account being classified as an NPA. Successive renewals for more than 2 occasions, irrespective whether the asset size was earlier classified as a standard asset, or even irrespective whether the appraisal does not point out to any financial difficulties, will also lead to the account being classified as an NPA. So this is all about loan, because when you follow the loan, when you give the loan, you have to follow all the processes. There should be a document. Recently, RBI has come out with a circular stating that about the necessity for complying with the Fair Practices Code in the matter of granting of loan. There we have said that the Fair Practices Code must be complied in letter and spirit, and it goes on to the extent saying that the rate of interest in the loan, what you have saying that my rate of interest is 15% per annum but compounded quarterly. So what is the effective annualized rate of interest? That should be mentioned in the loan document. If you are charging penal interest, that should be mentioned in bold. Further, RBI has also said to the extent that if you are charging on EMI basis, then the breakup of principal and interest also must be specified. The due dates must be specified. If you have sanctioned with a moratorium, when will the first installment start? That is also to be specified. That look, this is now under a moratorium. The first installment will start with effect from such and such date. That also needs to be specified. Now, if the account NBFC may turn NPA and on a happening of certain event, if the interest or principal is not serviced. Now, what they have further said in a circular, that you have to give instance that if you do not, with an example as to when your account can turn NPA, or when your account can be classified under a SMA category, that is a special mention account. Those are also required to be stated in the loan agreement by way of examples. So to that extent, so whosoever is drafting the loan agreements, the auditor, if the auditor is advising the client on drafting of the loan agreement, they need to take all these things in account. Now, Pml Act, to our surprise, if we recall, a few years ago, I think it was in 2019, more than 10,000 companies were marked as high-risk entities for failure to appoint principal officer or for failure to get themselves registered with the FinNet portal. Now, till today, around 3,000 entities still are there which have not registered themselves with FinNet portal or have not appointed their principal officer. Now this FIU has launched a FinNet 2, and all the companies, irrespective whether they have registered under FinNet 1 or not, they are required to again re-register themselves as an entity, appoint a principal officer, appoint a designated director, already appointed. Principal officer and designated director are already appointed, but again they have to, re-register themselves in the FinNet portal. As far as CIC Act rules are concerned, now every NBFC has to seek registration of 4 NBFCs or 4 CICs and file, monthly returns to each of the 4 CICs. Now, recently RBI had come out with the circular that look, on the CIC returns, you have 2 data. One is the consumer data and one is the commercial data. As far as consumer data is concerned, the relationships are not specified when it comes to consumer data because there is no column. But when it comes to commercial data, there is a column for relationships. Now, what they have stated, and they have stated that, look, from effective a particular date which they have specified, I think it is sometimes in July or September 22. Now, onwards, even in the consumer data, you have to specify the relationships, which will be enlarged, and the new formats would be made available. In respect of past few years, from the last 3 or 4 years, they have said that they have given timelines that those returns which have already been filed would need to be revised, and all the relationships which were hitherto not given in the consumer data now will be required to be given. Now, coming to the Insolvency and Bankruptcy Code and allied regulations, as I said, now NBFCs are financial creditors. So we have seen many financial creditors going to NCLT for a resolution of their borrower accounts, and that is happening. But as I said, documentation is very important, and documentation, date of default, these are very, very important. And there have been a large number of cases in the last few years on concerning default and recovery and default by the borrowers. There was one particular case where application was filed beyond 3 years from the date an account became an NPA, and the matter had traveled till Supreme Court, and the Supreme Court had dismissed the application. The NCLT and NCLAT has dismissed the application being barred by a limitation, and the Supreme Court again had affirmed its view of the NCLT and NCLAT. But following that, there are a number of other judgments on the limitation point of view. So therefore, from the perspective of the NBFC being a lender, all those judgments in the context of limitation, in the context of applicability of IBC are quite very important. So further, every company, NBFC, has to become a member of NESL, National E-Governance Services Limited, and information relating to borrower has to be filed with NESL. A few years ago, NCLAT had issued a circular that whenever you file an application as a financial creditor, being an NBFC, then a report of default from this e-governance services has to be required to be annexed with the application. Now, what has happened at that point of time, many companies in the pre-IBC era, say prior to 2016, had granted loans. So those companies obviously would not have anyway filed would have not anyway become a member of NESL or have filed information relating to sanction of loans with NESL, and therefore there is no question of any record of default. So the matter had went to a High Court, Calcutta High Court, and Calcutta High Court says that no, this is one of the additional requirement. It is not a mandatory condition that before coming to NCLT, one needs to have a record of default from NESL. It is one of the grounds. If you have other documents to support that there has been a default, that is also sufficient. But be as it may be, membership of NESL is quite important, is very important because it is a requirement from stemming out from the IBC code and mandatory to all NBFCs irrespective of asset size giving loans. Now we have another master direction, IT technology framework direction. This applies to systematic as well as non-systemic NBFCs. When it comes to systemically important companies, they have to even undergo information system audit once in every 2 years. So a lot of scope for our professional brothers who are doing ISA, who are doing ISA audit. But as far as smaller companies are concerned, not non-systemically important, they have required to comply with IT framework to the extent that is specified in the direction, but not a full-scale compliance as applicable to a systemically important company. Now we have a scale-based regulation. This scale-based regulation is effective from 1st October 22. So basically, I believe that once these regulations are in place, the present regulations in the form would need to be substantially revamped, would need to be substantially changed, because here there is a new concept, as GM sir had said, that now RBI is classifying NBFC into different layers, starting from the base layer, middle layer, upper layer, and one top layer. So these concepts and plus additional stringent requirements would be applicable to each of these layers. The NOF requirement would stand changed, and now what they are proposing that over a next 3-year period, you achieve a NOF of 10 crores. So those things are there with these directions coming into the scale-based regulation coming into place. Now, many of these circulars were already discussed by RBI, GM sir. But one point is important on declaration of dividends. So earlier, what we used to say that when it comes to declaration of dividends, we need to comply with Section 123 of the Companies Act. But now what has happened in the matter of declaration of dividends for NBFCs, you have to comply with the circular issued by Reserve Bank of India. Therefore, if there is a company having no customer interface, having no public fund, it is a type 1 or a pure investment company, then there are no restrictions on distribution of or declaration of dividends. But if you are a company which has customer interface, may or may not have public funds, that is, I am in the business of loan, I may also business in the shares, but I am in the business of giving loans, then there are restrictions on the declaration of dividend. So your dividend in any case, in the best possible case scenario, can exceed 50% of your profits. Therefore, if you want a profit of say 1 crore, you could have declared a dividend of up to 1 crore if you are a pure investment NBFC. But if you are an NBFC having a customer interface, you cannot declare dividend beyond 50 lakhs. That is the outer limit. Again, it depends upon the capital adequacy, the compliance with the leverage ratio, the net NPA. Not only net NPA, not only in the current year, but also in the last 3 years. So if those, so for example, if your net NPA is beyond 6%, then there are strict restrictions on declaration of dividend. So before declaring any dividend, general perception is that it is my money. So if I am a company and I'm a loan company, and irrespective of CRAR or net NPA, earlier till FY21, there was no, we could have declared dividend following Companies Act, but now we have to follow this circular also. So this is very important. Now, provisioning norms, as we had discussed with JM sir, what RBI has said, as far as systemically important companies are concerned, that look, you have to, on a day-to-day basis, find out if an account has turned NPA. Earlier, banks or NBFC used to do at the end of each quarter. Now, what they have said, on a regular basis, day-end basis, whenever you do day-end processing, you have to find out if an account has turned NPA. Once an account has turned NPA, it will be upgraded to a standard category only when, as on the date of upgradation, there are no arrears or overdue installments of interest of principal or no arrears of interest. Therefore, to give an example, say a loan installment is due on a monthly basis. So 30th April, 30th May, 30th June, 30th July. On monthly basis, installments are due. So NBFC does not serve installment for the month of April, May, and June. So as on 31st July, since the installment for the month of April is not served, then account becomes NPA. Now on say 1st August, the entity serves the installment for 30th April. Therefore, 30th April being served, the installments now due are 30th May, 30th June, and 30th July. So installment of 30th May is due as on 1st August. But what is the overdue period? June, July, 60-61 days is there. So account gets upgraded from NPA to standard because earlier. Now what they have said, as on 1st August, since the account had already become an NPA, irrespective whether the 30th April installment has been served or not, all arrear installments of 30th May, 30th June, 30th July, all have to be served. Only then this account will be upgraded from NPA to standard. Now, in view of a demand from the industry that look, this will severely impact the balance sheets, the RBI has granted time till 30th September 22 to comply with this framework. But this does not apply to non-systemic NBFCs, and they are free to follow their extant procedure. Now, coming to RBI Act, there was some issue on registration. Now, as we have discussed, what is an NBFC? So quite a number of times this has been discussed, what constitutes an NBFC. So you have the 50-50 test. If the more than 50% of assets and more than 50% of income are from financial assets, a company needs to seek registration. Now, if you see the present Caro on the question of loan, question of NBFC, there is a specific question whether the company is requiring a certificate of registration, which is there also presently also, and whether it is carrying on business of an NBFC without a certificate of registration, then the auditor has to state reason as to why it is carrying. Coming to CICs also, there are a number of questions in the Caro. Coming to investments, loans also, the questions are there in respect of investments made, in respect of loans given. Please clarify whether the terms and conditions of the giving of loans are prejudicial to the interest of the company. Therefore, if a loan is made and there is no document supporting the giving of loan, as to how the auditor will comment. Again, there are questions in the present Caro on the renewal of loan, that if there has been a renewal of loan, please specify the instances. If there are loans repayable on demand, please specify the instances. So now, this Caro also carries a lot of significance in the matter of reporting of loans, investments, securities, and guarantees. So, as I said, for registration, NBFC, new NBFC registration, the timeline, they have given a net own fund of 2 crores. This is as of now, but over the next 3 years till 25, it has to be raised to 10 crores. So even the existing companies have been given a roadmap. Like earlier, if you recall, in 1997, it was 25 lakhs. In 1999, RBI gave a NOF of 2 crores, but existing NBFCs, they were not given any timeline to achieve 2 crores. Then sometimes in 2015, RBI again came out with a circular and giving a timeline that by FY 2016, you have to raise from 25 lakhs to 1 crores, and by 2017, you have to raise to 2 crores. And many of the companies which have failed to get the NOF 2 crores by 31st March 2017, majority of them have got their registrations cancelled, and even the appellate authority, they did not find any favor. The matter had traveled to High Court, Supreme Court also, though even the Supreme Court in cases did decline to give relaxation, and it only left to RBI to decide whether even after 2017, say if they have achieved NOF or not. The Supreme Court also left to RBI to consider the application. It did not pass any order in favor of the SEC. So now with the limit of 10 crores, so therefore the companies should do well fast to scale up to the prescribed level of NOF. Now, this is very important. Chapter 45, Chapter 3B, Section 45Q, to override other laws. The provisions of this chapter has effect, notwithstanding anything inconsistent therewith contained in any law. So, therefore, when it comes to taxation, this section occupies great importance. As such, when there is a conflict between the RBI Act and between Accounting Standard AS 13 or say any of the accounting standards, then the RBI guidelines prevails over the accounting standards. In taxation, when there is a situation that interest on loans being NPA have not been recognized or recognized on cash basis, as against Section 145, which mandatorily requires you to account for interest, PGP and income from other sources on accrual basis. In case of companies, as such, we account for prepare financial statements using accrual basis of accounting, but RBI regulations in case of NPA do not permit you to recognize interest, and therefore interest on NPAs are supposedly not subject to tax, and therefore to that extent, this Section 45Q comes into rescue to the NBFC lenders, that they are not subject to be paid tax on the interest income on NPAs. Now, cancellation of registration, if you fail to fulfill any of the conditions specified in the law, then registration may be cancelled. So as yesterday also when we and Vivek met GM sir, he was telling that many companies have not filed their returns for last 2 years, and to these companies we are issuing show cause and for cancellation of certificate of registration. RBI wants companies to be compliant. So if you are not compliant, the risk of cancellation of registration remains. It is very difficult to form a new NBFC. It takes a lot of time. It takes a lot of efforts. RBI does scrutinize very minutely. Many a times after you have filed a application, you will find that your application has been returned back, and thereafter again after making some corrections, as the RBI may say, again you submit. So they want to see how serious player you are in before you are given access to the market. So companies which have NBFC should comply with the regulations and to keep it alive. So this was all about RBI Act. Now coming to 1 or 2 points on which are important in the context of these directions. So what is very important is that companies which do not have public funds, which do not have any customer interface, they do not need to comply even with the prudential norms. So this is very important. Now, NBFCs which are having customer interface but are not accessing public funds, they are also exempt from the provisions of Chapter 4, that is prudential norms of the directions. So if you are not having any public funds, if you do not have any customer interface, this means you are a pure investment NBFC. And if you are a pure investment NBFC, then you need not even comply with the prudential norms of the directions. Now, the companies in the group definition which is given here, it is a very wide relationships, parent, subsidiary. That is, it covers everything: AS 18, 21, 23, 27, common brand name, related party relationships. It is a very, very wide definition which is there, but this is applicable only for the purpose of arriving at the multiple NBFCs. It is not applicable for computation of net own fund. As sir has also said, the computation of net own fund, you have to see the provisions of Section 371B. Now, leverage ratio is very important. The leverage ratio cannot exceed beyond 7. So if you have a say net worth or own fund of say 10 crores, your total outside liabilities cannot exceed 70 crores. Now, this total outside liability would include current liabilities, short-term, long-term borrowings, plus guarantees which you may have given on behalf of third parties. So that the leverage ratio cannot exceed beyond 7. Now, every company needs to frame a number of policies. So one of them is the investment policy. Now, what is here important is that if you want to classify investment from current to long term or long to current, you can do it, but only twice a year, that is on 1st April or 1st October. Now, earlier we had a practice that some investments are shown as stock in trade, convert the stock in trade to investments. Some are shown as investments, convert them to stock in trade. What is to be kept in here in mind that when you are converting investments from stock in trade to long-term investments, when you're converting shares held from stock in trade to long-term investment, that is permitted. That can be done twice a year, but now it is taxable. Under Section 28, so that is to be kept in mind. Now, another factor here is between the interplay between ICDS and RBI directions or the Companies Act. So in ICDS, investments, when it comes to shares in stock in trade, you can value shares at cost or market price, fair value, whichever is there, computed script price. But when it comes to ICDS, it is to be done on a category wise. So equity share is one category. So all equity shares, all the cost and aggregate cost and aggregate market value of all the equity shares to be considered. And on an overall basis, if there is any loss, net loss, that only needs to be provided for. Unlike what is prescribed in these RBI guidelines or accounting standard, that you can do it on a script-wise basis. So to that extent, there is a deviation between the two. So on when a company, as I said, when they are giving policy on demand loans, so interest rate on loans, and interest is to be charged on either monthly or on quarterly rest. So it cannot be that we are charging interest on annual basis when it comes to demand or call loans. So that is prohibited. You may say that interest would be charged quarterly but payable annually. Interest would be charged monthly but payable annually. That is permitted. But because to that, if I say that interest would be charged at the rate of 15% per annum, payable chargeable quarterly but payable annually, then the effective rate of interest from 15% increases to say 15.3 or 15.4%. That is permissible because there is a compounding mechanism there. It is a cumulative sort of a loan, but there cannot be a stipulation that interest will be charged on an annual basis. So what is again here important, that in case no stipulation, if there is no interest, then the authority has to record reasons in writing at the time of sanctioning demand or call loan why interest is not charged, why moratorium is granted. Again, as per Section 186, barring certain class of companies, you have to charge interest to the extent laid down in Section 186(7) at 1, 3, 5, 7, 10-year government security rate closest to the tenor of the loan. It cannot be free of interest. So asset classification, nothing new. Multiple NBFCs we have discussed. This is very important. Now, disclosures in the balance sheet. Many companies, when we have reviewed, we found that when they make, first, they do not make provision. This is very important. They do not make provision for NPS. So one has to understand, if there is a default in payment of principal or interest, and either in part or in full, and this default continues beyond 6 months, then an account turns an NPA. And once an account turns an NPA, first, whatever unrealized interest is there, that needs to be reversed. Second, you cannot charge interest any further. Third, provision has to be made for substandard or doubtful category, as the case may be. Fourth, interest would be recognized on cash basis only when it is received. Now, you can upgrade this account to a standard category and then continuing charging interest only when the entire arrears of interest or principal has been recovered, not before that. And the provision which you make for bad and doubtful debt, this cannot be netted with the value of loans. So my loan as short-term loan or long-term loan would be shown on the asset side of the balance, would be shown as separately under short-term loans and advances and long-term loans and advances. The provision which I made under against short-term loans and advances or long-term loans and advances would be shown in the liability side of the balance sheet as short-term provisions or long-term provision. Netting is not permissible. As against NBFCs, in case of non-NBFCs, when we make any provision, we are allowed to deduct the value of provision from the value of loan. So my loan is say 1 crore, I show it as short-term loan 1 crore. There is a provision of 10 lakhs, less provision for bad and doubtful debts 10 lakhs, and net amount 90 lakhs is shown. So that is possible in case of non-NBFCs, but not in case of NBFCs. Similarly, provision for depreciation investments, again, whether it is against long-term or against short-term, that has to be shown on the provision side of the in the liability section of the balance sheet under short non-current liabilities or current liabilities, and as the case may be. Accounting year is fine, so those are all fine. Yeah. Now, if there is any change, this is very important. Whenever there is a change in the principal officer, auditor, even the specimen signature of the officer. So therefore, you had 2 directors, now 4 directors, 2 of them resigned, new people came. Now the 2 new of them are the persons who are authorized to sign on behalf of the company. The specific signatures of these persons need to send to RBI. So many a times, many companies miss this point. This is the most important when it comes to giving of loans. And as GM sir was also saying in his opening part, when it comes to digital lending, many companies were flouting the fair practices code norms. And when they were flouting the fair practices norms, in the sense that number one, they had in their agreement specified that they would have access to the contacts, they would have access to all the data which is in the mobile companies which are doing lending through apps, and they used to even call the parents of the students, leading to harassments of the students. All these matters got escalated to even till the PMO level, RBI governor level and the PMO level. And then the warnings were issued to all these digital app lending companies that you cannot resort to all those practices. And so for entities giving loans through digital apps, the working group had also submitted recommendations, and in time to come, full-fledged regulations for these app-based companies are bound to come. And I think much development we are going to see on these in these companies in the next few weeks or few months. So when it comes to transfer of control, if you intend to transfer 26% of the shareholding, prior approval of RBI is must. If you want to change or appoint directors, which results in 30%, more than 30% of the composition of board changing, then you need to again seek prior approval of RBI. NBFCs are not allowed to become partners in partnership firms, LLPs, AOPs. So I think these are all, yes, this is very important. Filing of mortgages with central registry. NBFCs are required if there are equitable mortgages. If you have extended a loan against the security of a property by way of a mortgage, then besides creation of charge, the details must be filed even with SARSAI. And this is very important in the context of IBC when you file claim as a secured creditor. So this is all what was important, I think. Thank you all. Over to Mayur now.
Yeah, I think Mayur has left.
Yeah.
Thank you so much, Bhaiya, for such a detailed deliberation. Calcutta में I'm sure बहुत कम लोग हैं जो आपसे better deliberate कर पाएंगे on NBFC. And as you know कि मेरे को कोई भी अगर doubt होता है तो पहला call आप ही को जाता है कि भैया इसमें क्या होएगा और कैसा होएगा. So thank you so much, Mohit bhaiya. Shall we have a 10-minute Q&A session, bhaiya? Agar
Yeah, sure.
There are any queries?
One query, Mohit bhaiya.
Yes, sir.
There is always a query. Two queries are there specifically. Number one is in regard to the certificates. Whenever we give certificate for NBFC, we always try to give in the standard format of standards on audit. But the clients are always reluctant to say that the format has to be given in the same format which is there in the RBI, to whomsoever it may concern the earlier erstwhile format. But I think there is no issue if we give the details in the annexure, and the format is as per the RBI, where we give the practitioner's responsibility, the auditor's responsibility, and the client's responsibility. Am I not audible?
No, आवाज थोड़ा सा
एक
हाँ, it is not very clear.
एक second.
In the meanwhile, there was one question on the chat
Yeah.
box. Is there any guidelines from RBI if a company can transfer shares held as stock to investment?
Yes, they have given inter-transfer guidelines, and they say that you can transfer from current investment to long-term investment or long-term investment to current investment with the approval of the board twice on 1st April and 1st October every year. And that transfer has to be made at lower of book value and fair value.
There was one question from Rashmi. If the NBFC company has taken registration with only one CIC, then also does the auditor need to report?
Yes. RBI has mandated that all NBFCs need to obtain a registration of all 4 CICs. There was earlier a specific circular to that effect. And now what we find, whenever we seek approval on some point or the other, not only they ask for the 4 CIC certificates, they also ask whether you have filed returns. And if so, let us know up to what date you have filed the returns. So that is mandatory. If a company is not complying, there is an obligation of on the part of the auditor to report to RBI, because now this forms part of the directions also.
And one more,
Mohit, the query was that when we give certificates under NBFC norms, whenever we are giving certificates, we have a standard format of giving us certificates as per standards in audit. And earlier there was like to whomsoever it may concern another way of giving certificates. So for the public at large, is there any bar that when we use this format given by ICAI in regard to certificates like practitioners responsibility, management responsibility and all, when we define that and give the details in the annexure, like in the net owned fund certificate or the RBI, whatever certificates are there in RBI, apart from this also, there are many other certificates which is required throughout the year. So the certificates which we gave, I hope there is no bar by RBI given the format as per standards and audit.
No, there is no bar by RBI, and rather we have been giving, as you said, the certificate in the format which has been prescribed by the institute only. There is a guidance note on certificates, right, and plus standards on audit as well. So we have been giving, and RBI has never objected. But yes, only say if you are giving certificate to NSC, now they take certificates on a quarterly basis and annual basis on net worth and all. You have to specifically follow their format. If you deviate something, then again they come back and look, they'll say, no, this is not in our format. So what we do at times, if the regulator, if some sectoral regulator does not accept that, as you had said, we prepare a separate annexure for that and get it signed by the client. There is no objection on the form.
And sorry, I missed the answer which was there in the chat box in regard to the conversion from inventory to investment. Many a time what happened for taking the benefit of the income tax and others, the investment stock in trade is converted to investment so that there is a capital gain instead of business income. So just now I heard only that half yearly it is done. Is it half yearly or there is any law or we can do as per the board resolution?
No, what RBI has said that you can do conversion from current to long term or long term to current only twice a year on 1st April and 1st October. So we have taken a view that when they talk of current investment, this current investment includes stock in trade. Because if I say that stock in trade does not form, this means stock in trade as far as NBFC is concerned is totally unregulated in the prudential norm. So that would be a very, what you call a would not fall in the spirit of RBI law. So that is why we consider when they talk of current investment, we believe current investment includes even stock in trade.
But yeah, when we talk about current investment and stock in trade, we can say as of now, in the spirit, it is 1st October and 1st April. But
Yes.
if the client wants to take the icing on the cake, I would reading between the lines. As of now, there is no law for stock to investment.
No, you say that would be a very, very aggressive view, and RBI will not agree to that. Why? For the simple reason that RBI say you are a company, you are dealing only in shares. Correct. So you say you are a 100 crore company, your 100 crore is in stock in trade. Now, if I say my stock in trade for this stock in trade, accounting treatment, there is no accounting treatment prescribed in the guidelines, in the, what you called this prudential norm guidelines. That would be not very correct to say. To that extent, your entire asset size is unregulated then, as far as accounting is concerned. So that would not be good. Plus, when you even do the computation of NOF, what they say, deduct investments in subsidiaries, deduct investments in companies in the same group. Therefore, if I say it is stock in trade, stock in trade is not covered, then I will not be deducting anything from while computation of NOF. So you see, RBI, sees the spirit. All across in my last 25, 27 years, RBI says that don't literally read my law like you do for Income Tax or Companies Act. Please follow the spirit. So to that extent, it will be difficult.
And therefore, NOF just like deducting investment in subsidiary. So is it only investment or any sort of advance given and all is also covered?
Loans to subsidiaries, investment in subsidiaries, both are to be deducted for.
But it is for subsidiaries, not on the other group company.
No, when it comes to subsidiaries, it is loan and investment. When it comes to companies in same group, again loan and investments. When it comes to other NBFCs, only investments are to be deducted.
Correct.
There was one question whether the auditor appointment rule is applicable for financial year 21-22 or 22-23.
Which appointment tool?
Auditor appointment rule.
The rule for 3 years, auditor's appointment rule is one. They're asking about the 8 companies.
No, 8 companies FY22 for इसमें कोई doubt नहीं है. We have done lot of झमेला last 4-5 months on this 8 and कि वो 2 crore के नीचे होगा कि नहीं. We and Vivek speaking a number of times. You have also spoken a number of times. We have written to Institute PDC, spoken many times, and even now he has clarified also. 8 is 8. Please do not violate RBI law. If you do more than 8, you will be in trouble. Because you see, RBI straight away issues a show cause and takes action. So don't risk this.
Okay, one more thing, the auditor appointment, many people have this confusion that the auditor as per RBI guidelines can be appointed for 3 years, as per Companies Act for 5 years. So people have this confusion.
Yes.
It is the appointment of the auditor per se, not the firm.
ये भी भैया अभी वो क्लियर कर दिया ना
RBI जो what has happened then नहीं अभी क्या हुआ जब ये आया था ही इज वेरी राइट क्योंकि सब हम लोग ये बात किए भाई कंपनीज एक्ट 5 साल का आरबीआई 3 साल कैसे बोल सकता है सेक्शन 45 क्यू प्रोविजंस ऑफ चैप्टर 3B विल कंपनी जिसका ऑडिटर ऑलरेडी से 19 में अपॉइंट हुआ था 19 से 24 तक तो उसने क्या किया 19 किया 20 किया 21 किया या समथिंग 3 साल जिसका ऑलरेडी हो गया सब ने रिजाइन कर दिया और आरबीआई और कंपनीज ने लिखा है अपना जो जनरल मीटिंग एजीएम या ईजीएम में जब नया ऑडिटर को अपॉइंट किया तो लिखा ये बात कि भाई 5 साल के लिए अपॉइंट किए थे बट आरबीआई का ये कानून आ गया 3 साल से ज्यादा नहीं कर सकता ऑलरेडी इसने 3 साल सर्व कर दिया है तो इसका कैजुअल वैकेंसी हो रहा है ड्यू टू रेजिग्नेशन इसलिए हम इसको फिल कर रहे हैं सो मोस्ट ऑफ द कंपनीज हैव डन
बट ये 1000 करोड़ के नीचे क्या एप्लीकेबल नहीं है अब
है जी
1000 करोड़ के नीचे वाली ये वाला चीज एप्लीकेबल नहीं है ना उसमें तो वही 5 साल वाला
हाँ 1000 वाला निश्चिंत है वो 5 साल
अपने लिए
नहीं तो अज्यूमिंग ये हो जाता 3 साल सब पे लागू है तो मेरे ख्याल से हम लोग जितने आए हैं सबको सब एनबीएफसी से
ऑडिटर नहीं मिलता
हाँ सही बात है
ऑडिटर भी नहीं मिलता you see what sense does it make मैंने we and Vivek told James sir yesterday also what sense will make I have an audit of say 5 NBFC my 8 NBFC my average audit fees is 50 60 70,000 5 लाख मैं 5 लाख रुपया के लिए इतना मेहनत करूंगा इतना पढ़ना लिखना सेमिनार करना सर्कुलर देखना अरे 5 लाख के लिए कौन करेगा प्रैक्टिकल क्योंकि आपको ऑडिट भी करना है आपको रिटर्न भी फाइल करना है दुनिया भर का पढ़ाई लिखाई भी करना है प्लस छुट्टी आएगा उसका भी जवाब देना है कौन करे
सर्टिफिकेट भी देना है नोटिस का
जवाब देना है तो आई थिंक ये तो क्या है आई थिंक अभी हमारे देवाशीष सर प्रेसिडेंट है आई थिंक वी शुड टेक हिज हेल्प टू मेक अ रिप्रेजेंटेशन दैट क्योंकि दिस अफेक्ट्स ऑडिटर दिस अफेक्ट्स कंपनी से ज्यादा ऑडिटर की भाई फर्स्ट ऑडिटर का ये जो एनबीएफसी है दिस इज अ वेरी स्पेसिफाइड सब्जेक्ट very limited people have knowledge of this domain so please do not restrict them नहीं तो क्या होगा कि from specialized people it will go to non-specialized people. Number
The
one,
quality of the work will deteriorate.
yes, it does not make economical sense for me to do NBFC audit.
Priyank, you have to also coordinate and you have to send a representation to the Deputy Governor as discussed with the GM, sir.
Yes, yes.
A couple of questions more, Bhaiya. Are all NBFCs required to register with CERSAI?
You see, only if you are giving loan against equitable mortgage, then you are required to register with CERSAI.
ओके एंड भैया एक चीज और है, जैसे जो अभी बैलेंस शीट बनता है इन डेज में, ठीक है, तो जो XBRL फॉर्म जाएगा DNBS 2 एंड स्टैट्यूटरी ऑडिट जो जाएगा DNBS 10, वो इन डेज का ही नंबर जाएगा सारा का सारा, या IGAP का नंबर जाएगा?
नहीं, so what they have said कि as far as NOF is concerned, computation of NOF is concerned, RBI has come out with a circular. For example, you say आप अकाउंट फॉर कर रहे हैं इक्विटी का थ्रू OCI, फेयर वैल्यूएशन थ्रू OCI, करेक्ट? व्हाट दे हैव सेड कि अगर फेयर वैल्यूएशन में से तुम्हारा इन्वेस्टमेंट्स का 100 का 200 करोड़ रुपया हो गया, so that fair valuation gain net of deferred tax is in your OCI. That is not to be considered for NOF. But if there is a net diminution on an overall basis, on a category basis, they have stated in the circular, then that net has to be considered. Positive gain को नहीं करना है, but net है, negative है, then that is to be considered. So that way they have specified. Basically, in greater substance, माने बहुत जगह में NOF का जो principle है, that applies even for India's companies.
One more question was there, Bhaiya. An audit firm has been statutory auditors of a NBFC, non-deposit taking, non-systematically important company having asset size below 10 crores for the last 8 years. यहाँ पे भी will the rule of rotation apply?
No. आप वही Companies Act को follow करो, forget RBI circular. Because RBI circular does not apply to do. तो आप वो perpetuity में 5-5 साल करके करते जाओ, कोई problem नहीं है. Till unless rotation guidelines as per Companies Act become applicable, then it is separate. नहीं तो कोई problem नहीं.
Right. ठीक है. Okay. Any other questions from anyone?
I think all done.
और मेरे ख्याल से I can't see any other questions as such. अगर कोई है तो you can ask, otherwise we'll call it quits for the day.
I think all has been answered.
I think this was one of the best sessions of NBFC ever heard by me, at least. I don't know about others, because there are so many questions in mind, as rightly said by Mohanji, that to actually do a practice of NBFC now with the type of clients we have in Calcutta and the restriction of 8 companies, limiting our inflow and the amount of hard work to stay updated with the latest updates. And if you are having a big company and small company of NBFC, then in the Schedule 3 guidance note, Division 1 guidance note, Division 2 guidance note, Division 3 guidance note, then the RBI updates. So 700 to 800 page of guidance note on Schedule 3 itself.
Yes, correct.
Then linking that with the guidelines of RBI and the master circulars and the daily changing prudential norms. And if you have an app-based NBFC, then different norms and whatnot. So a person should be there. I think we should really look forward and have a certificate course on NBFC now, with so many things with NBFC. So it's really wonderful. And since if you have not registered for tomorrow, kindly register. Tomorrow we have the best of the best speakers on direct tax and indirect tax. We'll be talking only on NBFC. So if you have still not registered, kindly register and do join us tomorrow sharp at 4 o'clock. And we are also having a session on bank audit on 22nd and 23rd, where the chief guest is none other than Devashish Mitra, president of ICA. Keynote speaker is Mr. Amarjit Chopra. We have the speaker, Mr. Dhananjay Gokhale, who will be speaking on NPA. He's the guru of NPA from Pan India. We have Mr. Srinivas Joshi, who will be speaking on LFR, who was the person behind the technical guide on LFR. On the second day, we have Mr. Sonawala, who will be speaking on advances, and he takes at least 30 to 40 physical session on this advances throughout India. He's traveling a lot nowadays because of bank audit. And then we have Mr. D.S. Premnath, who is regular for last 5 years on using Excel in audit. So if you have not registered, do join us at instamojo.com/ACAE and register for the bank audit as well. And do join for the second day of this mind-boggling and brainstorming session on NBFC. Thanks to Mohitji for designing this complete package for us. Over to Priyank to give a formal vote of thanks.
Right. I think a formal vote of thanks में तो कुछ रहा नहीं है. I mean, with Mohit Bhaiya being,
No
at
problem.
the core of ACA, but still Mohit Bhaiya, thank you so much. I mean, NBFC में इतना changes हो रहा है, as Vivek has, rightly pointed out that it's becoming very difficult to keep pace with it. With so many circulars coming in from the RBI and the Companies Act changing and so many things happening, it is actually become a specialized job. अगर आप NBFC audits कर रहे हो, as you rightly said कि अगर खाली art कर रहे हो तो economies of scale do not work for you. So that is absolutely true. We have a e-memento for you, Bhaiya.
Thank you so much. Thank you.
So this
Priyank,
is
for
for
Mohit Bhaiya, you have to print it, laminate it, and send it.
Great.
Thanks a lot, Mohit, and thank you for all the delegates for joining and staying connected for 3 hours, because 3 hours session is not small. And thanks for staying connected, and we're thankful for all of people who have joined in this busy schedule. As 15 is knocking on the door, ITR returns are there for the companies. Many of us help companies in filing the ITR. And still after this meeting, we have some NBFC company having in this for the first time and 29B calculation for the first time with the Part B and Part C. So all these are there. Thanks for it, and stay tuned tomorrow 4 o'clock sharp. Best of the. Thank you.
Thank you. Thank you.
Thank you so much.
Bye.